Peace and love, good people. Peace and love. Welcome back to another episode of the Universal Growth Network's Stock Market Daddies, the chart code. All right, let's get right into it. Zero DTE options by Webull Learn. Again, Webull, I need to know who wrote this. All right. DTE options, or 0 days until expiration. Options also let's get to it. 0 DTE options, also called same day expiring options, are option contracts with 0 days remaining to expiration. This means that when you purchase a 0 DTE option, it will either be exercised or expired at the end of the same day. As such, the window of time to manage these positions is narrow. If the position is in your favor, you may benefit from the short timeline. But by the same token, if it moves against you, there won't be another opportunity for it to turn profitable. 0 DTE options can be profitable under the right conditions, but they're also highly risky, and they won't fit with every investor's objective or risk tolerance. Investors should be aware of the pros and cons before trading these products. Key takeaways: larger price swings in either direction are likely as expiration nears. Time decay is constantly reducing the value of options. That's crucial. Okay? If you're betting that it goes up, if it go down a little bit right in the beginning, you cooked. You're cooked. You might as well cut your losses and get in at a better entry point. 0 DTE options are high risk products. All right. It's not for the faint of heart. It's not for rent money, electric bill money, kids' scholarship funds. It's not for none of that. It's not for none of that. Understanding option pricing over time. If you compare similar options contracts with different expiration dates, you'll notice that shorter term options are typically cheaper than longer term options at the same strike price. This is because more of their time value has depleted. In the case of a 0 DTE option, the shortest term options available, the time value has depleted almost entirely. As a result, 0 DTE options have the lowest premiums of any option at a given strike price, all else being equal. At the money, 0 DTE options can be powerful leverage tools, as their lower relative prices carry potential to achieve higher percentage returns. A small, favorable price movement may cause the option's value to move upwards significantly, benefiting investors who hold the long position on that option. By contrast, an unfavorable price movement can quickly wipe out gains or deepen losses. As always, with options trading, high upside opportunity comes with increased risk of the downside. Typical pitfalls in 0 DTE options. Understanding the impact of time decay is critical to avoiding some common pitfalls in options trading. Listen up. On the time decay curve below, all right, you see that? The rate of decline in time value generally accelerates as the option approaches expiration, especially for at-the-money options. The closer we get to expiration, the less it's worth. So if you open up the position today and it closes this evening, as the minutes go by, the less and less your option contract is going to be worth. This has stark implications for the risk-reward profile of these assets. Yes, you can potentially achieve high percentage returns by buying short-dated options, but that also tends to be where the highest degree of risk occurs. Since there is less than 1 day left with accelerating time decay, the lack of flexibility in position management is another issue for the option holder. If you decide to buy 0 DTE calls or puts to speculate on price movement, keep in mind that time is working against you. You'll typically need the stock to make a sizable move in a short time to make a profit, especially for the cheaper OTM options. The bottom line, position management. Position management is vital to using zero DTE options effectively. It is true that buying a zero DTE option contract is relatively cheaper than at longer expirations, and the loss is limited to the premium paid. But on such a short time scale, the margin for error is slim. You can't get this wrong. Your gains or losses will happen quickly, and you should take extra care when making the decision to handle these assets. Zero DTE options can be tempting, but they will not fit every investor's risk tolerance. All right, it's not for the faint of heart, and it ain't no coming back. If you shouldn't be in the zero DTE option from 9 a.m. till 2. I'm just sorry, you shouldn't. You got cooked a long time ago. Like, you got cooked. Unless that thing is just running up, and even if it's running up, the time is still eating away at the profit. So if you go up $20 and you dip back down to 15, like, man, you going back up to 20 is not very likely if it's expiring today. Maybe if it's expiring next week, you might be able to hit that new high. But the zero DTE is the ultimate scalping setup. All right, peace and love. I hope you get rich. I hope this video helps. Please comment down below. 70% of y'all or more are not subscribed to the channel. We need to do better than that. All right, peace and love. Like this video. Consider joining the Patreon. And click the link in the description to open up a Webull account and get your free fractional shares today.